Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GLADSTONE Commercial CORP Quarterly Report. Gladstone Commercial is a real estate investment trust, REIT, that provides various businesses and services through its investments in single-tenant and anchored multi-tenant net leased assets. The company's portfolio includes industrial properties, office real estate sale-leaseback transactions, build-to-suit transactions, with developers leasing services to 107 tenants across 27 states, representing 20 diversified industries. The company has a diverse range of tenants, including middle-market private businesses and investment-grade rated companies. Its total assets are approximately $1.2 billion, invested in 143 properties nationwide. Gladstone Commercial Corp stock price drop. A year of decline. The past year has been tumultuous for Gladstone Commercial Corporation's stock price, plummeting by over -29.9%. The primary cause of this decline is a combination of factors, with the most significant event being a 20% dividend cut in January 2023. This reduction from $0.1254 to $0.10 per share was attributed to economic headwinds and a strategic decision to conserve capital. Ongoing concerns about financial sustainability have also contributed to the stock's decline. Despite the dividend cut, analyses have highlighted a high dividend payout ratio of 444.4% in CONE 2025, indicating that dividends might be funded by non-earnings sources. The company's significant debt and vulnerability to rising interest rates have further exacerbated these concerns. Additionally, mixed earnings performance and exposure to the office property sector, which faces structural challenges due to hybrid work models, have put pressure on the company's assets. These factors have led to sustained negative sentiment, with the stock reaching new 52-week lows in October 2025. Net income and profit margins. A decline in performance. The financial performance of the company has experienced a decline in net income and profit margins over the past year. In Q3 2025, net income decreased by $7,584 compared to Q3 2024, while YTD 2025 saw a decrease of $2,935 compared to YTD 2024. The primary reason for this decline is an increase in operating expenses, including depreciation and amortization, property operating expenses, and general and administrative costs. Additionally, lease revenue has decreased, contributing to the decline in net income. Contractual amendments to the advisory agreement have also had a negative impact on profit margins. Furthermore, the elimination of incentive fees for certain quarters and an increase in interest expense have further exacerbated the decline in net income and profit margins. As a result, operating expenses as a percentage of operating revenues increased from 62.6% in Q3 2024 to 64.2% in Q3 2025, while net income margin decreased from 14.1% in YTD 2024 to 11.8% in YTD 2025. The company is generating a significant increase in positive operating cash flow, with a substantial jump from $34.2 million in 2024 to $72.4 million in 2025. This indicates that the company's operations are producing more than enough cash to cover its expenses and investments, resulting in a healthy financial position. The company's debt level has undergone a significant change. Initially, the credit facility increased from $155 million to $200 million. However, this was followed by a substantial increase in total debt, rising by 71% from $495.4 million to $847.5 million. Regarding interest expenses, there were two notable increases. Firstly, interest expense rose by 15.1%, amounting to an additional $1,405,000. Secondly, the interest expense increased by 5.8% from $28,259 in 2024 to $29,900 in 2025. These changes indicate a significant shift in the company's financial obligations. Management's outlook on company strategy. Management is optimistic about the company's outlook, expecting earnings growth through increased rents, high occupancy rates, and controlled expenses. The capital recycling program will continue, with non-core properties being sold to fund new acquisitions or debt repayment. A focus on acquiring industrial properties in secondary markets is also a key strategy, with investment proceeds coming from equity and debt capital. To address liquidity needs, the company plans to refinance maturing mortgage notes through refinancing, cash flow, and equity offerings. Management will maintain a conservative liquidity position while actively seeking financing opportunities in private credit institutions and non-bank lenders. Additionally, interest rate risk is being mitigated through derivative contracts that cap variable rates on loans and leases. The company has made significant investments and disposals in recent years. Notably, it has acquired a total of $606.1 million worth of properties since 2020. Additionally, 20 new properties have been added to its portfolio. On the other hand, the company has divested 6 non-core office properties in 2024 and 2 more in 2025, indicating a strategic effort to optimize its assets. The company has a history of paying dividends to its shareholders. Specifically, it has made dividend payments on its Series F preferred stock in both 2024 and 2025. These payments were made through the issuance of additional shares, totaling $343 in 2025 and $385 in 2024. That concludes the financial summary for GLADSTONE Commercial CORP. Feel free to comment below, and I will be happy to answer them when possible.